That's what I'm talking about. What a day, what a day. But you know what I always say, right? We're only as good as our next trading setup. Time to get back to work tonight, guys. It's Tuesday evening. It's the 28th of September, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for tomorrow. That's Wednesday. Wednesday, of course, trading session. Got a great video in store for you guys and gals tonight. Charts are already in the background, as you can see. Got the Emini. Got the Nasdaq, and we got the gold on our radar for tomorrow. Had some big moves down. We got some breakouts from the ranges we talked about in last night's video. Those big moves lower put us right back into some ranges once again as we go into the closing bell here tonight. That means we're right back to our normal tricks tomorrow. We're trading breakouts. We're trading failures. We're trading the rotation. Had a great day today in our trade room. Looking forward to another great day as we finish up this last week of the month of September. I got a bunch of good trades on our radar for tomorrow. By the end of this video tonight, you'll know my favorite trades setting up for Wednesday's trading session. You'll also know some stuff to avoid to keep yourself out of trouble, keep yourself in the green tomorrow, whether you're trading on your own or you're trading with us tomorrow in our morning trading session. Before we jump into the video tonight, though, as always, I want to encourage you, make sure you subscribe to our YouTube channel. I publish great videos. We'll have our best trade ideas every evening on this YouTube channel, so make sure you subscribe so you don't miss tomorrow night's video. Hit that little bell icon because a lot of stuff we post here is very time sensitive, obviously, so hit that little bell icon so always get notified we publish something new. If you guys have any questions, drop those questions for me. I would love to answer any questions that you might have along the way, so don't be bashful with the questions. And as always, I appreciate you guys carving some time out tonight. If you enjoy this video as much as I enjoy making, hit that like button, that thumbs up here on this nightly newsletter. So thank you so much for tuning in. But enough of the intro, though. Time is ticking. Wednesday is right around the corner. And of course, boy, big moves today. Finished the session in some ranges. Big breakouts going lower. Man, oh man, if you watched last night's newsletter, you had a field day with the breakouts going on today. So we got a bunch of ranges right now, right? Range on the E-mini, range on the Nasdaq, range on the gold. A lot of these are very similar, as you can see. We're all bearish, going to those ranges. So, of course, want to sell the pops, want to sell the breakouts. Of course, same thing, all right, across the board, right? Sell the pops, sell the breakouts, sell the pops, sell the breakouts. Now, sometimes those pops turn into reversals. And so sometimes those reversals are pretty great too, right? Especially after a big move down that we saw today, right? Maybe some short squeeze, right? A little short covering rally going higher there. So I can easily see a bunch of short trades, a bunch of reversal trades here, and obviously, right, some breakouts going lower as well. We get some really nice key levels waiting here, really below all three of these markets. Again, I'm going to make sure we break down the entire plan so you guys know exactly what I'll be looking for trades tomorrow morning in our trade room. Speaking of tomorrow morning, let's make sure we grab a look at the calendar here real quickly because tomorrow is a Wednesday. Now, of course, we're going into the end of the month, right? So you got to remember, the end of the month, we always expect it to be a little more volatility. And as I mentioned last night, towards the end of the video last night, so make sure you guys watch the entire video here. Like I mentioned last night, Friday morning is kind of the deadline for this debt ceiling they're talking about, right? You probably have heard about this, right? The debt ceiling, the government shutdown, and they're trying to slip in that 3 point whatever trillion, don't call it a stimulus bill. Trying to combine all that together right now. The news media, of course, they're going to make it sound like the whole world's coming to an end. The U.S. is going to default on their credit, and oh my goodness, it's the chances of that happening are about zero. They will figure this out this week, and this will end up getting done before that kind of looming deadline for Friday morning. In the meantime, though, you probably have heard about the yields rising, right? The bond yields rising. And what happens is when the bond yields begin to rise, because people are worried about the U.S. defaulting on their credit bill here, which again will get worked out this week. You can almost guarantee that. With those yields rising, stocks become less appealing, right? That's kind of the the negative correlation to it. And so it's been pushing down these stocks. The E-minis, and of course bringing gold down along with it. We may see more of that tomorrow. But the key takeaway from this is the volatility will likely continue here as we go into the end of the week. We may see some whippiness tomorrow because, again, big move down today. Whenever we see a really big move in one day, the following day does tend to be a little bit, range bound. Now, hopefully I'm wrong tomorrow. I hope I'm wrong tomorrow. I hope we get another big leg down. Hopefully those yields keep on spiking and we keep on dropping. Now, we had a great day today, so I would love to get more of that for tomorrow. Chances are, though, with the big move we saw today, chances are we're going to see some choppy ranges for tomorrow. So just kind of keep that in the back of your mind. But hopefully the volatility will continue. Hopefully they'll keep on, whipping everybody, scared. Obviously not folks who watch this video, right? Don't be scared by the news media right now. We'll get it all worked out. But hopefully that continues to give us some more volatility here for tomorrow. There really isn't any major news we have to worry about. We get some news tomorrow at 10 o'clock, but I wouldn't expect that to be the market moving event. We do oftentimes see very good trades in that 10 o'clock to 11 o'clock hour, but I wouldn't think it's because of that pending home sales. I wouldn't worry too much about the Jerome Powell speech at 11:45 tomorrow. This is an ECB thing. It'll be happening over lunch, so I wouldn't think that's going to affect us tomorrow. So I would expect a full trading day tomorrow, the morning session, the afternoon session. I do anticipate things to be a little bit rangy just because of the big move that we had today, but again, hopefully the markets will surprise me and give us some more nice strong trends, either going lower, right, with the yield spiking ahead of this debt ceiling discussion, or of course maybe a short squeeze tomorrow as well. Now tomorrow morning, don't forget, we're going to be in our trade room 8 o'clock Eastern time. I would love to have you there, right there with me. I'll put all of the membership links to get into the trade room tomorrow morning. I'll put that down in the description of the YouTube video, or I'll put a big button for it here on the website below this video here tonight. So grab that and get registered for tomorrow morning. If we have a day tomorrow like we had today, you'll be happy you're there with me. All right, we got the charts ready to go. S&P's there, Nasdaq's there. Gold, of course, is always there, isn't it, right? Never goes away. Let's grab some S&P first. Let's get it going. Again, a lot of this is going to be a little bit repetitive here. All three of these markets are very, very similar. Gold has a small little adjustment to it that is definitely worth sticking around all the way to the end. What do we know right now about the S&P? And for the most part, it's pretty much all of these markets right now. We get a big bear move down. And again, as I mentioned in the news analysis, it wasn't a small move. It's a very, very large move here going lower right now, right? Big breakout going lower. So we definitely saw a good example today of how the breakout leg is the measuring leg, right, where the market usually goes, right? We talked about this last night. Whenever you have a range, we see a breakout, right? The breakout leg is oftentimes the measuring leg, and we definitely kind of use that to our advantage today in the trade room. So big move down into a trading range. The bears have control, and so really what you want to remember is you want to be using that range as a magnet. Find levels of resistance, such as expanding triangles and prior swings. You want to find levels of resistance and sell at resistance as we go higher. As the market goes lower, you want to find levels of support. Got a lot of support down here right now, including a very big low there at 43.25. And of course, want to find levels of support and want to buy right off of that low. Now, clearly, we're very bearish right now, so being a buyer off the low is going to be a little bit more difficult than being a seller. But yeah, we'll kind of give you guys. I'll give you guys the details on how to buy it and sell it here in this video tonight. We can definitely trade breakouts. We can absolutely trade breakouts. Like I mentioned before, we get the debt ceiling, credit default discussion going on, which has a snowball's chance in hell of really happening. But the breakout breakout levels right now, right? Potential breakouts going lower to that 4,300 is our next big objective down there. Big low at that big round number 4,300. That would be my objective for tomorrow if we can get a breakout going lower. And of course, if the buyers can get something going here, that 4,400, 4,405, boy, we don't oftentimes see two big round numbers, 4,400 being one objective going higher, and of course 4,300 being one objective lower. It's just the way the market is playing out here right now. So definitely have potential to buy it low, sell it high, and trade some breakouts. So let's talk about this. The one thing you want to remember is the bears have the overall momentum. So let's talk about what if the market goes higher here. If the market runs higher, what you want to do is you want to get up into an area of resistance. And there are kind of three basic scenarios that you want to think about, right? What we want to do is we want to focus on failures. We want to do what happened back here. We want to wait for the pop up, wait for the buyers to come in, try to buy it, and then sell back down as we go. Get up into resistance, wait for those buyers to come in, get them trapped in a long position. Their stops are sitting right below that low. And one of my favorite trades is to trade the rotation, as we always say, which means we're looking at those stops. We are selling into stops and then, of course, grabbing that new channel off that low and trading that, right, and trading that rotation. It's a buyer failure off the high into that first test of that new channel as we roll over. That's one easy way to sell off of these highs. Another way to do it would be, let's say, for example, we really blast up. We take out some of these highs up here. It's a very strong push in the overnight session. When you get a really strong blast like that, even though I want to sell back down into that trading range, I like to give the buyers the benefit of the doubt, because whenever you get a real strong move in one direction, there's a good chance they're going to retest that high and then come back down, or possibly get it to keep going higher there with a breakout. I could easily see possibly here how we may see a measured move coming off of that low, right? So could definitely see this thing pushing up into this area here sometime in the overnight. And of course, if it does that, it will be pretty bullish at that point. So in that situation, I like to give the buyers the benefit of the doubt, let them try once, let them try twice, and then I've got their stops exactly where I want them. Remember, if you're long at the top of a range into resistance, those stop losses, how do you get out? You got to sell your way out, right? So this is why failures work so great in range-bound markets. Sell that failure, and then again, trade the rotation, right? Get a big objective back down to the other side of that trading range. So we go up. We really pop in this situation, right? We really pop. The buyers try once. The buyers try twice. Those failures now kick in. That failure kicks in. We go grab, right, our new channel, and we're trading that first pullback off of that high. Again, this is called a two-try failure. It's just a variation of that failure setup that I talked before. It's a failure, right? We're selling right into those stops, and of course, we're selling that turn as we try to make that run back down to retest those lows. Okay, how do we buy it up here, though? So again, sometimes we go up, we pull back, and we fail. Sometimes we go up, we pull back, and we hold. So if they hold and they jump off the moving average, now what do we call that? We call that a 1, 2, 3 breakout. Now keep in mind, it doesn't matter how strong that first leg is. You'll see a lot of times where that first leg's really strong, but they still fail and come crashing back down, right? They still get that failure into that first test on the way back lower there. So even if it's very strong going higher here, remember that range is very, very strong as a magnet. Make them hold that pullback. And what all that matters is the strength of the jump off the moving average. That's what matters most. Once I have that 1, 2, 3 breakout, then I can go out, I can mark up the high now, I can mark up the low now, and I want that first test off the low of this channel. We always take the first test of a channel and then we redraw the channel from there. Now, as far as the entry setup goes, my two favorite entries, keep in mind, This is a 9,000 tick chart. I'm not going to trade the 9,000 tick chart, right, tomorrow morning in our trade room. I'm going to drill down, and usually the price action entries that we find there are going to be traps, failures, into pullbacks, into strength moves. Now, if you've taken my free quick start class, you know what those look like, right? You know the rules of that. If you haven't done that yet, though, if you're here for the first time, or maybe you haven't taken that quick start class yet, we have a great shortcut course. It's free. It's brand new here on the website at schooloftrade.com. I'll put a little button there for you. I'll tell you, in that quick start class, you'll learn my 3-step strategy, the same strategy we use every day in our trade room to find the 3 to 5 best trades every morning at the opening bell. I cover all the market conditions, support and resistance, price action entries, of course. And most importantly, I've got literally hundreds of examples of how we apply, for example, those 1, 2, 3 reversals, 1, 2, 3 breakouts. I have probably 100 examples now about how we get in off those traps, those failures, those pullbacks, right, into those strength moves. So you'll definitely want to go out, right, and grab that free trading class linked up in the upper right-hand corner. If you're serious about your trading career, that is. So that's how I want to trade this going higher. Now, I have 2 more breakout patterns we're going to talk about as we go deeper into this video, all right? I'm not going to give away all the good stuff right at the beginning, so make sure you watch all the way till the end, because each of these markets, I'm going to give away some more of these breakout setups we're looking for. This is one of many. We'll keep on talking more as we go, right? Because all of them are pretty similar here today. Now, next up here, stay away from the middle, right? Stay away from the middle. The middle is always going to be a little bit dicey here. And of course, as we go lower, right? As we go lower here, what's the best way to trade this thing as we go lower? Well, what you got to remember is we're very bearish right now. So I can be pretty aggressive as the market goes lower. I can't be very aggressive being a buyer off of this low, right? I can't be very aggressive being a buyer here. I've got some major support levels down below me, so I am going to need to see at least a little bit of strength going lower here for me to want to call this a breakout. So let's talk about this as we go lower here. As we go lower, how would I buy it off the low? First of all, right? We take out the low, we complete kind of this rotation off the triangle, markets rotating back and forth. How would I buy it down here? You would buy it the same way you sell a really big pullback. You got to respect the momentum. You got to rope in those bears, let them try once, let them try twice. And then once they try once and twice, now you got all those bears roped in. And how do they get out? They got to be a buyer. So where are their stops? Their stops are sitting right above that high. Once I get that nice strong pop, right, going back up, or a nice strong signal going back higher, that's my signal to be buying this thing going back up into that trading range. And then, of course, at this point now, once again, I can now look for that strong run higher. I can find that new channel. And of course, like always, I can trade that rotation, right? We can trade that rotation. This is a 2-try failure, right? And then, of course, buying that first pullback. And again, I say first pullback. It's not usually a pullback setup. If you've taken that quick start class I mentioned earlier, you know what I'm talking about, right? That's the basic idea. There are some more advanced tactics on this, and we'll do that together tomorrow morning in our trade room. How about going lower here? How do we sell it as we go as we go lower? Well, I talked about the 1, 2, 3 breakdown, right? That's an easy way to do it. So this could be right here, 1, 2, 3 breakdown. We mark up that low, mark up that high, right? Short that first pullback. And again, it's usually a trap down here. A lot of times these big moves here, right, going lower, there'll be little traps, right? Stuff like this. There'll be a little trap high, that trap. That gets us now above the moving average. Buyers try to buy it back up. They come in and fail. We're selling that failure into pullback combination here, okay? So there's a bunch of variations of that I can look for. Traps, failures, pullbacks as we go. Oftentimes what happens though is when the market breaks out, it'll push lower, it'll hold, and you'll see a smaller channel. Not that I wouldn't love to get a big channel, but oftentimes it's just not a very big channel. It's a very small channel here. So 1, 2, 3, and then of course, right, mark up that low, mark up that high, right? And I get that again, that first test off of that high. That will be a great short there, right, coming off the high. And again, I've got 2 more breakout patterns, so make sure you keep watching here for us this afternoon, right? Where's my target again? Target, of course, down at that 4,300. If we see something like we saw today, where the market takes off the downside and then goes into a range, right, into a range down there, what do? We find levels of resistance up above the range, and we sell it back down. Same idea, right? Literally the same plan of attack as I'm talking about right now. So we may see that range form at some point tomorrow. Again, we are only scratching the surface on these setups here tonight. The S&P, keeping it nice and simple on the S&P. You know how I want to trade this as we're going forward. Let's keep going though. How about some Nasdaq right now? Over on the Nasdaq is very similar, as you can see, to the S&P. We have that big bear move down, get a big juicy trading range right in the middle. We're finding levels of resistance up overhead to sell back down in. We're finding support off those lows, right, to buy back up. We are staying out of the middle. We're going to fade the breakouts, right? We're going to sell high. We're going to buy low. And of course, we are going to look for a breakout. All right, we'll talk about some more breakout patterns here as we go to the NASDAQ here right now. So, how do we sell this? Well, again, it's a very strong bear move down. So any pullback right now that pulls back, we're looking for those buyers to try and fail. That failure often leads to that first test on the opposite side, right? You can see here as we go higher, right? The buyers come up, they try to buy, they fail. We then come over, right? Take that first pullback, right? After it, trade the turn, trade the rotation. It's a very, very simple strategy when you know there's a range in the middle. The key is make sure you're combining that stuff off areas of resistance here. Now, as we go higher here, right? As we go higher, we talked about the 1, 2, 3 breakout before. We talked about if we really blast going higher, maybe we see a measured move going higher here. That would be that's one option, right? Maybe we really blast and push higher here. If we really blast and push higher, remember, give those buyers the benefit of the doubt, right? If they really rip and run higher here now we give the buyers the benefit of the doubt. Let them try once, let them try twice, and then rinse and repeat, right? Let those bulls try, sell right into those stops, mark up that low, mark up that high, and hit that first test, right? Failure into that first test, and back down we go. How do we buy a breakout going higher here? Another breakout going higher. Here's another one to keep in mind. Let's say, for example, we go higher here and we jump and really sprint. One of my favorite breakout trades is that strong move up, shallow pullback, and higher high in price. When you get that strong move up, shallow pullback, and higher high in price, okay, that's exactly where you look for that trap underneath that low. So if we really, let's say we turn, right? We come off that low and bam, right? Big move up here, get that shallow pullback, that higher high in price, right? There's your trap low. You'll see an example of that same setup right here. Strong move down, shallow pullback, lower low. You can see they did it right there. Right? They were trapping there. They were trapping there. You can see there's probably a bigger example, right? There's a bigger example right there. Same thing. Strong move down again. Strong move down, shallow pullback, lower low in price. Everybody selling that trap. Same thing as we go higher, right? So let's say again, we come in, we pull, and we run. Okay, we run. At that point now, we get that pop up, strong move up, shallow pullback, higher high, right? And grabbing that trap as we're heading back up here. Where would these buyers like to get to? They've got that 925 level overhead, but really, if the buyers get their grip on this thing, that 15,000 is a really, really healthy round number there, and that should be a pretty significant objective, I would imagine, of the buyers. The buyers would love to take back that whole move we saw today, but that is probably a little bit unlikely until they get this debt ceiling thing all organized or ironed out on Capitol Hill, which again will likely happen here. Make no mistake though, as we go higher, we are looking for that short coming back down into that trading range. Remember, if we get back into the range here, stay out of the middle, wait for that pop, wait for those buyers to fail, and sell it back down in. As we go lower here, can I buy it? Definitely can. I got my pendulum swing off the high, pendulum swing off the low, all these lows down here. I could definitely buy this area. I just got to make sure we let the bears try a couple times. Try once, try twice, wait for those stops. Right? Get that pop back up. I like to always look for a trend line coming off that low, strong signal candle coming off of it, trade that failure. Again, we call these 2-try failures. You got to wait for 2 tries because we're going against the overall trend and the short-term trend right now. Then, of course, from there, mark up that new channel and then trade the rotation. And again, when I say trade the rotation, remember, we're going to drill down to a faster time frame. We're going to find the failures. We're going to find the traps. We're going to find the pullback entries as we rotate off of that channel low and potentially go all the way back up to the other side of that trading range. Again, I've got hundreds of examples of those entry setups I'm talking about in that quick start class linked up in the upper right-hand corner. What's a breakout look like? Well, again, we are very bearish overall, so I can definitely be more aggressive with a breakout going lower. I've got this 14,700 area on my radar right now. That's a pretty big low on a much longer time frame. So 14,700 is definitely on our radar right now. Now, we talked about the 1, 2, 3 breakout, right? We talked about the 1, 2, 3 breakout going down. If we really push strong on this, don't be afraid to grab that first pullback or that first test, as I always say, right, off that channel. Remember, if we have enough strength, it doesn't matter where we are. It's almost a guarantee at the very least we're going to retest that low. So it makes it worth it for us to at least try to get some skin in the game off the high of that channel, take some profit off at that low, and see how far that 1, 2, 3 breakout might run. Where might it run to? Well, if the bears really get their way tomorrow, that 14,560 area is another big low on this chart. It's a huge support zone you can see there well below us here. Now, what's another possible breakout scenario? Another possible breakout, so this is number 2 on the list here tonight, would be, let's say, for example, we get that strong move down. We don't get a full pullback, right? We don't get that full pullback now. It kind of goes and shallow and runs lower. That's what happens. Right, you're looking for that full pullback off the channel. You're going, oh man, it kept going, right? This is why this setup works so well. So if we see this market run lower, shallow pullback, the shallow pullback drives everybody crazy. It does, right? Because everybody wants to sell. Again, usually there'll be a channel there. And you're like, no, don't go without me. Don't go, right? Whatever you do, don't chase it going lower, right? Don't chase it going lower. Wait for that little trap right there. It's a great setup. I mean, I talked about it back there, right? Strong move down, shallow pullback, lower low, get that trap, right? That trap up there off that high. That is definitely something I'm watching for here tomorrow. And then, kind of one of the variations of that type of setup would be as we go lower, if it kind of grinds lower. Sometimes the market will grind as it goes lower. When that happens, we call these runaway markets. Okay, runaway markets are basically strong pops that don't pull back, and they just keep on grinding and grinding and grinding. These are usually called spiking channels. And the key is just make sure you wait for that trap. Those traps will almost always turn into a failure setup, into a pullback combination, into a strength move going lower. I like to, whenever I see these things kind of grind like this, I like to draw a really tight channel and try to combine that trap off the top of that channel. It's not required, but I'll tell you, if the market just kind of pops and grinds and grinds and grinds, any traps, any pops above those highs, whether or not you have a channel there or not, are going to be worth your time. Nothing's bulletproof, nothing's perfect, But I'll tell you, you want to get in the habit of when the market pops and starts to grind like that, any trap high until we reach our objective is going to be definitely something we're interested here for tomorrow. And again, I've still got a couple more breakout patterns we're going to talk about here as we go deeper into this video. So don't you go closing out this window just yet here. So now we know how to buy it off the low. Now we know how to sell it off of this low. We know where the market wants to go. We're just kind of waiting to see if this thing will pop up and give us a short right off that high, or it pops up and holds and reverses for us, or if it keeps on grinding lower. And again, just be aware, again, big move today. We may see this market, may spend some time here tucked in this range here as the market kind of catches its breath after today's, big run down here. Really, really looking forward to tomorrow's trading day. I really like range-bound markets, so I hope we get this market's coiled up with some ranges, but you know me, I'll take whatever the market gives us tomorrow morning in our trade room. Last but not least here, get the gold. Now, of course, gold is, surprise, it's kind of the same thing. There's a couple more wrinkles here on the gold. Gold is a great example today of how the breakout leg is the measured leg. Right. So tomorrow, for example, and this will also apply to the Emini and the Nasdaq. OK, as I mentioned, a lot of this I'm talking about, even on the gold right now, can directly be applied to the Nasdaq and the S&P. So if we see a breakout going lower, right, where that measured move is going to be. You know where the market wants to go. Right. We had that range from yesterday, that big pop lower, and again, that's how you kind of know where the market wants to go. Right? And of course, you can see a fantastic example of that strong move down, shallow pullback, lower low in price. Are we surprised? Are we surprised? There's a trap right there. Are we surprised? There's a channel right there. Like I said, if you watched last night's video, you had a field day today. The only problem we had today was I didn't have enough fingers to keep hitting, hit the buttons. It was a great plan of attack from last night, and if you simply follow the plan from last night, you did pretty well today. So, reality is bearish into a trading range. We kind of know what's going on right now. That range, of course, acts as a magnet. I got levels of support below. I got levels of resistance up above. We're buying low. We're selling high. One interesting difference about the gold that I thought was pretty cool was that gold actually didn't break and really run. I mean, it ran pretty far, but not as much as the Nasdaq and the S&P. And the reason why it's important is, I mentioned this up here, right? We never got the breakout pullback. Okay, so this is one, and this is kind of the third breakout pattern we'll talk about here tonight. You'll notice here that big range, right? There's this line running right across this area at 1746 and change, right? Maybe it's 0.5, maybe it's 0.1. It's very close, right? So what'll happen a lot is you'll see these markets blast out, and then because nobody wants to sell way down here, right? The market oftentimes will pop back up, and you get another round of sellers, kind of almost like a breakout pullback. We call this the edge of the range in our trade room, right? So that is something I'm watching for tomorrow. And of course, as you can imagine, that level also translates over here. So if we get another breakdown, that is, of course, kind of the third type of breakout pattern that I can look for here tomorrow, right? So let's kind of go over this, right? How would we trade this here on the gold? And again, a lot of this is very similar, but we're putting a little bit different spin on this one because we have a little bit differences here, right? The levels we have to work with here, right? So, okay, as we go higher here, same thing. We go up. We get up into some areas of uncharted territory. The buyers come in. They foolishly now, right, try to buy that pullback. They fail. And we, of course, are selling into those stop losses, right? We're selling that failure pattern. We're grabbing that new channel, and we're trading the turn. Okay, great opportunity there. up at resistance above the range. Now, one slight variation, and I'm gonna reward you for watching the entire video right now. One slight variation would be, you'll notice we have a little bit of a trend line coming in here right now. Let's say, for example, that we get a pop up, and then instead of a nice little pullback failure and back in, it goes like this. It runs and comes back in like that. Okay, when that happens, you don't want to sell right inside the range, right? When that happens, grab that trap. So if you're still watching this video right now, here's a bonus setup for you to say thank you for sticking all the way through here with me. I know the video is long, but as you can see, it's worth it. It's definitely worth the time invested in. If you're serious about your trading career, this video is designed for you. So again, we want to get up. We want to get these buyers trying and selling at stop losses, right, back down again. The problem is, though, is if this goes up, slices right through that moving average, then they try, well, now, come on, who wants to sell right there? I don't want to sell right there. That trend line is right in the way. So what do? You wait for that trap. And we saw an example of this, right? We saw an example of this last little mini example, right, where it went down, one pop, and everyone was waiting to sell it right above the high of that range. That's going to be the short you want to look for here. Again, if we pop up and we can't get that failure, it slips underneath and tries, wait for that trap, okay, and sell that sucker back down again. Traps are great whenever you're worried, in this case, about selling too low. Okay, that's kind of a variation. And guys, that can also apply. That's this same pattern technique also should be applied to the S&P and the Nasdaq. Everything I'm talking about tonight could pretty much universally be applied across the board here. One thing the gold has that the S&P and Nasdaq don't have is that nice 46.3 area. Now, what do you think the best entry pattern will be to short that big pop? A two-try failure. Absolutely. So buyers come in, they rip it higher. Remember, there's a big range above there too, right? So if it really pushes and really pops here now, I'm going to definitely want these buyers to try once, try twice. And remember, I'm on a slower time frame right now, so you can see the entire chart here. We're going to look for this specific entry pattern on the faster time frames I talk about in that quick start class. All right, so make sure you grab that to get all those smaller details, because I can't go over everything here in these YouTube videos. So that, of course, is the one try, two try, and then it really all depends how we look. If as we go lower, if I can get a quick pullback here right now, I can definitely take both of those. I could take that two try failure. That first test is always the best test, as we say. And then again, think about it, right? If the market rolls over here, really rolls over, and then runs lower like this, now you're going, okay, I need a trap. Right? It's really low now. I need some sort of trap. All right? Promise you don't share this with the rest of the world, okay? This is one of my favorite combinations right here. The two try failure into that little trap off the high of a channel. That's a money trade. That is a money trade, right? We go up, we roll back lower, that trap right above that high. Money trade, right? Never want to miss that one as we go. And then, of course, if we do go up, and the buyers then could hold that pullback. And remember, they can blast and run higher. Yeah, blast. That's the key. They've really got to give me some juice coming off that moving average. Remember, it doesn't matter how much the first leg is. All that matters is, can they hold it? If they can hold it 1, 2, 3, yeah, well, now we can go out. We can find that new channel, find the high, find the new channel, drill down to your faster time frame, and find those, 4 different price action setups we use to buy the lows of those channels. Okay, that's an easy way to trade that reversal. Where would the buyers want to get to? Yeah, they want to get right back to where we finished up last night, or yesterday, right? Back to those highs up there. The buyers would love to get this thing up, hold that pullback, get back up into that range here. Again, even if we're back in that range, if the market's ripping higher like that, you're gonna, again, you might not go to the moon, but it'll almost always at least go back to retest the high of it. That's all you need. A little bit of profit, remove that risk, and see how far it goes. we never know how far the trades are going to go. We never do. So we always stop the point of entry quickly, once you hit the first target, and then see how far it goes here. The big thing for gold, of course, as I mentioned last night in the video, we get the whole debt ceiling, government shutdown, debt default, whole thing going on. So don't be surprised if we do some chopping and some slopping inside that trading range. Just sit tight, wait for the breakouts, and sell it back down again. Now, speaking of a breakout going lower, how do we trade this? This is that third breakout I've been teasing you with here tonight. I know. Oh, and by the way, before I go into it here in detail, what else can I help you get better at? What's the biggest obstacle standing between you and being successful in these markets right now? Is it psychology? Is it finding levels of support and resistance? Is it triggering the entries? Is it forcing trades? What is the biggest reason? If you can give me one thing, let me know in the comments section, because if you're still watching right now, you are the person I do these videos for. You are obviously committed to your trading career, and you're the folks that I love to work with. So let me know in the comments section below here, what is the biggest obstacle standing between you and getting that? We all want to make daily income, right? Weekly income, monthly income. What's standing in your way? Is it simply support and resistance and buy setups and sell setups? Is it mindset, right? Are you always kind of shooting yourself in the foot, making mental mistakes? What is it? Is it not picking the right market? Let me know in the comment section below. I want to make sure I help you guys out as much as I can on this YouTube channel. So how do we buy it? How do we sell it? We buy it because we're so bearish with a 1-2 failure, right? Nothing new there. Same basic idea. How do we sell it? Well, we talked about the 1-2-3 breakout. You guys are experts on that by now, right? 1-2-3. We wait for that 1-2-3 and then sell the first pullback. Yep. We talked about that strong move down, that shallow pullback, and that lower low in price. Yep. That's a great one. Okay, don't be surprised if you see that tomorrow, right? Don't be surprised if you see that tomorrow. Anytime we see a strong move, shallow pullback, lower low, everybody wants to sell that sucker back down again. So keep your eyes on that for tomorrow. And then don't forget the underbelly of this range. Really, this whole area right there, right? This whole area really, for the most part, right there. Strong pop down. We oftentimes see this where the market will rip and run lower. And usually what happens is, we'll get the strong run down, the shallow pullback, the trap, while everyone's waiting for the perfect pullbacks, right? We're getting aggressive going lower. The market spits lower, and then all of a sudden we get this really strong pop back up. Don't fall for that pop thinking it's some sort of reversal. It oftentimes goes right back to the underbelly of that range. And what happens is the buyers come in, they go, oh, see, ranges are magnets. Yeah, but it's a bear market. It's a very strong move. Remember, anytime we see a real strong blast outside of the range, it's going to love to come right back to the underbelly of that range. Now, when it comes back to it, it's very difficult to pick a top on this, because there are some times where you get these V bottoms and the market just rips and runs. Maybe tomorrow, 10:15 in the morning, right? The news comes out and the market rips. I don't know. So I'm not a big fan of trying to pick the top of that reversal, that pullback. I'm a big fan, though, of waiting for those buyers to come in, try to buy the pullback. Their stops are now a sitting duck here right now. You have all of that momentum, and now you've got it. Now it's a failure into that pullback combination, which we love so much in our trade room. Remember, trade the turn, right? It's a failure. And then, sometimes folks tell me they don't have confidence in that failure. If you don't have confidence in the failure, it's okay. That's okay, right? You don't have to take the failure. Once it gets rolling lower, now find that new channel, right? And then sell that first test. And a lot of times that first test is this money trade where you get that trap. It's that trap off the high there. And again, I'm just simply kind of scribbling on my chart right now, right? I'm just simply illustrating right now. I have hundreds of examples of these setups inside that free trading class I keep mentioning, linked up in the upper right-hand corner there. Also in the description of the YouTube video. All right, guys? So failure, pullback. My nickname for this is the punch and pullback. right? Kind of the punch and pull back, right? It punches, it pulls back, we trap in those bulls, and right back to retest that low. All right, guys, I've given us now, I think, perfect ammunition for tomorrow. Stay out of these middles, sell it high, buy it low, make sure you respect the market's momentum, and hopefully tomorrow, I'll tell you, if tomorrow is half as good as today was, we're going to have a great day tomorrow in our trade room. Wrapping things up here, I hope I'll see you tomorrow morning at the opening bell. I'll put all the membership information to get registered and join me tomorrow at the opening bell. We'll trade this stuff together. I'll put all that stuff in the video description here below us. I've got a toll-free phone number right there. Don't be afraid to call the office. I've got live chat on the left, live chat on the right. You can always drop those questions in the comment section below. Guys and gals, thank you so much for tuning in. Don't forget to subscribe if you haven't done so already. Hit that like button and come on and see me tomorrow night. Tomorrow night, we're coming back here with some more videos on this YouTube channel. So make sure you subscribe and don't be afraid to call the office if you guys have any questions. That's it for me tonight, though. Be well out there. Be nice to each other, will ya? And be here next time, okay? Adios, amigos. Bye-bye for now.